Center. For those of you who don't know where the Cutler Center is, we're on the first floor of the Babson Commons, right next to Starbucks. And I'm going to start by introducing myself, and we have some people in the room who are going to follow along. Those who are in the room, I think you have your Bloomberg terminals opened up. That would be fantastic. And those of us who are online, the session is going to be recorded. We're also going to send out a list of functions that we covered today so that you can go back and review them whenever you want. The Cutler Center is open pretty much whenever the library is open, and there's always at least one of us on duty here, and we're known as the Cutler Center Assistants. So without further ado, my name is Tavleen Arora. Feel free to call me Tav. I'm joined by
Gabriel or Gabe.
Yes.
Preference.
Both of us are Cutler Center Assistants here at the Cutler Center. This is our second Finance Friday session. And outside of, finance related things, both of us are part of the Babson College Fund. I cover the communication services sector. So we hold companies like Disney, Facebook, and Google that you might be familiar with.
And I cover the energy and materials sector. So like oil and gas companies, renewable energy companies, as well as materials. So Newmont, Soul Company, Mosaic, different.
Great. So I think everyone here should have their Bloomberg terminals set up, and you should have something that looks like what we have on the screen right here. Can I get a thumbs up if that's great? Awesome.
I'm able to get one on.
Okay.
Okay, I can.
Perfect.
Should I use this one?
Sounds good.
Did I use it?
So just as a general rule for everybody, if you get stuck on something that I'm trying to demonstrate, please jump in and interrupt me, because we want everyone to be able to follow along what we're doing. And that's probably the best way for us to go if you stop me. We will have like maybe 5 minutes at the end for Q&A, but I'd highly encourage you to, if there's something that we're talking about right now, please interrupt me or Gabriel, and we'll be happy to help you. There's a question right there. Yep.
No, I need help. I can't get to that page.
Okay.
What's that? Callum also is one of the Cutler Center assistants.
He's going to be helping out with
I'm going to send him around the room.
Great. Just bear in mind, whenever we speak in the room, the microphones are picking up what we're talking about, so everybody on WebEx can hear us as well. But for those of us that do have a screen that looks like this right now, we're going to start by talking about the Bloomberg Market Concepts course, which is a great way to continue what you've learned today. And it's a self-directed 8-hour course that covers all of the major Bloomberg functionality across major asset classes like equities, commodities, bonds. Today, we're mostly focusing on equities, but that's a great way to extend your knowledge. So we're going to teach you how to get your Bloomberg Market Concepts login, because it's different from having a Bloomberg account. So first and foremost, we have the Bloomberg Search Bar up here where my cursor is. And that's essentially like a Google search feature. And let's say we're going through functions and you don't understand, or you didn't catch what the keyword was. Like if I said ANR and you don't know what that was, you can type in anything that's relevant and use it like a Google search bar. So you can type like, who is the CEO of Apple, right? And it would work in a similar way. Like you don't really need to know the exact coding. You can kind of play around with it. So it's very user-friendly in that sense. Just like Gabe demonstrated. Perfect. Wonderful. All right, so we're going to type in BMC, which stands for Bloomberg Market Concepts. And that should take you to the Bloomberg Market Concepts page. And if you hit enter on your keyboard, all of you are on the colorful Bloomberg keyboards, which are color-coded for your reference, so you can get comfortable with using that. So we have an overview right here, but number 6 is where you would sign up for your Bloomberg Market.
And also, is everyone on Bloomberg and like on this screen or having any difficulties with that?
I can help you now if you need help with that. So if you need me to come around, just raise your hand and I can do that.
Yeah.
Okay. So those of us that are in the room, please go ahead and hit number 6 and sign up for your Bloomberg Market Concepts course. It should be pretty quick. You do need to put in a non-Bloomberg email, which means that you use your Babson email to log into Bloomberg. please put in like a personal email address that you have for this. The huge benefit of the BMC is that you can do it in here or remotely. So you can do it on your laptop. You don't need to have access to a terminal to do the BMC course. So that's a huge advantage. I will say for everybody that's joining us online and is unable to do this step, please just keep in mind how this works. And what we'd like you to do is please I would encourage you to contact one of the Cutler Center assistants. We're on shift, morning to evening. And so you can always contact us and we can create your account for you via the phone or WebEx. And we can create a dummy password for you and then make the account for you because the account can be made on a terminal only. But once that account is made, I can send you that dummy password. You can change your password at your end and then start working in the BMC remotely without ever having to come in. So if you're entirely remote, please reach out and we can help you make this account online. Great.
Sorry, just to make sure I'm understanding this correctly. The only way to set up a remote account is by contacting our staff, right?
Yes, that's right, Philip. Great to see you. Thank you for joining us. Yes, you can definitely either text me, email us at our Cutler Center assistant, email address, and we can set up a WebEx call for you so that you can set up your account because you do need to be on a terminal to set it up. But what I can do as an assistant is set up the account on your behalf.
Great, thank you.
Yep. So everybody in the room, where are we with the sign-up process? Have you got your login? Awesome. Great, perfect.
So the importance of using like BMC, Bloomberg Market Concepts, just to kind of get you like assimilated with the Bloomberg Terminal. As Tav said, it's kind of like a Google search for everything finance. You can look at the weather, you can look at top news, you can look at individual companies. You can really go from something like super like macro and big picture down to something super granular for really any company or any security in the world. My high school is on here and it's listed as like a security, and I can see the address and everything. And I can also see, Apple's income statement. So it's really everything from big picture to smaller picture. And so Bloomberg Market Concepts really help you kind of dive into that. But Bloomberg is also, primarily used for looking at companies and looking at things that people in finance need to use for their analysis. Security analysis, one of the biggest parts is finding companies, screening for companies, and then analyzing them and collecting information. And so, the presentation we've prepared today is some of the things that we use a lot, when going through this procedure and when trying to conduct research to figure out, what's best to invest in or what's best to avoid. And so in order to do that, we kind of broke it down by the different related functions. And so our plan is to go through that. But if you have any questions at any point, definitely feel free to stop us and we can talk.
Great. So we're going to run through all of the common functions that we use typically and that are commonly used in the industry. After the call, we're going to send out a list of all of the function, essentially the function keys that we've used, so you can refer to that after this meeting.
Yeah, so to start, we just chose a random company. We chose Mercado Libre. You may have heard of it. It's a big e-commerce company. Not doing too hot over the past couple of days, but that's
Economy for you.
That's a separate issue. It's not why we chose it. And so you can kind of see here this main related functions menu. And this is really the home base for every company's information. If you ever type in a company on Bloomberg, you can either type in its ticker. So like, I'll go again through what I did. Like, I know the ticker is BLI, I can type that in. And then you'll see the F8 button, which on a Bloomberg keyboard says equity. And so that shows that it's, it's a stock versus a corporation or a bond or something else. And so once I do that, I can hit enter and it'll bring me to this menu. And from here, we can really navigate to anything we want. And so we found it most effective to kind of start at the top with the company overview. So the company overview effectively will give you all the information about the company itself. And that's really the most important thing. If you don't understand the company that you're investing in, then you really probably shouldn't be investing in it. And then you're also going to just have a better edge and just be more knowledgeable when things about that company come up. When, like over the past week, when it falls 10% a week, maybe you'll know why it's happening more based on the company information.
Does that look good? Try the meeting.
So the first, the kind of the main function for this that'll really give you that overview is the security description. Its code is called DES, so you can actually type that in if you want to, but you can also get to it from the related functions menu. And this gives you really like the tier sheet of information about the company. We have a more expanded view here where we can see a lot of different things, corporate info, price charts, dividend information. But one of the best thing that you should go to when starting this process is just the company description. And it gives you a short one as well as kind of an extended description, because effectively, with this terminal, you can access every company in the world. We all know what Apple does, but maybe we don't know what Skyworks does. And we want to find out, what does this company operate in? It could be a semiconductor company, which it is, or it could be a food service company. And we won't necessarily know that until looking into it. So on a very kind of basic level, description, it is really a great place to start.
Great. So the next function I want to show you is CF. That stands for company filings. You can type that in right into the search bar that we showed you earlier. And you'll notice right above the search bar that Mercado Libre, which is the company that we decided to pick today for the session, it's already been loaded up in that security bar right here. So anytime I type in something like CF, which I'm trying to find the company filings, it'll associate it with that security that I've loaded up in that top left-hand corner. So I'm going to hit CF, and all public companies, as you may know from your classes, they're required to report earnings and important announcements to shareholders with the SEC or other departments. So here you can access annual reports, research, earnings calls, 10Ks, 8Ks, all of the above. And on the left here, you can see easy navigation. You can highlight research if you wanted to include it in your search. You can unselect certain options like presentations, which are, maybe more about their products and less about the company's financials. You can play around with it right here on the left-hand side. So this is CF for all company-related filings for you to take a look at.
And so then we've chosen a few of the other functions, and I'm just going to highlight a few just to show you some of the other interesting ones under the company overview. So along similar lines of company filings, which again, as Tav mentioned, is going to show you like things that are direct from the company. Every companies listed in the United States and American companies have to file quarterly reports and annual reports. Those are audited by the SEC, and earnings season, which happens every couple of months, is the time when all these reports are being released. And as analysts, you guys, when in the middle of the earnings season, it's kind of like you're running all over the place. I'm sure Tav's been doing it for several months now, and I also experience, when different companies release their reports, it's kind of like a burst of information, and you really have to sit down and go through a process and be like, does this materially change the business? Does it impact my analysis of what's going on? And so company filings will help you that, but company filings is also kind of taken with a grain of salt with the company news. What's going on as far as how the company, like you can see here, Mercado Libre to invest record $1.8 billion in Brazil. Well, maybe that's going to fundamentally change their business. Maybe they had very limited exposure to Brazil going like in the beginning, and now they have a lot. I'm not sure. Very a little more.
Oh, it's really big.
Big, good. So yeah, and so but I'm not too familiar with Mercado Libre, so now I'm more aware of it. So company news is kind of just a good way to have access to all of the more publicly released news versus the things under the SEC. It's a cool feature here is the artificial intelligence news importance. So you can kind of filter it based on what Bloomberg deems as most important or least important. Like Bloomberg, again, is just such an expansive financial database that this news thing will probably show every Mercado Libre bit of news on the internet. Everything down from a tweet from someone up to a Wall Street Journal article. So Bloomberg takes the liberty of actually going through each of those and being like, this is very important for you to know, and this is not as important for you to know. So when going through and trying to figure out what are happening to my holdings or what are happening to this prospective company, what's happening to this prospective company, it's really good to kind of rank it based on its importance.
Great. So that was CN, which is company news, just to recap. Next, I'm going to talk about insider transactions. This is not insider trading. This refers to when people within the company sell or buy shares of that company. So the key is GPTR, which frankly I don't know what GPTR stands for, but it brings you to insider transactions. And what you'll see here is, let me go to current right here, and you can probably see, who these holders of the stock are, what their position in the company is. I think this is the percentage of shares outstanding that particular holder accounts for. So for example, Capital Group Companies owns about 11% of the total shares outstanding of Mercado Libre. If I go back to the insider transactions, which is what I was going to show you earlier, you can look at an annotated time graph of when certain people in the company may have sold or bought shares. So looking at this, for example, this is dated 13th of August, 2020. Net shares was negative 120, and it was one person. If I click on that, I think it will tell me who that person in the company was. This is the director, what kind of transaction it was, the number of shares sold, and the trading price at which they were sold. So up here you can see the net buys and sells. That's how I know that it was a sell transaction. And we have a question in the room.
I have a really quick question. The insider transactions, does it only show the transactions which the top management is making, or does it show the transactions made by any of the employees of the firm?
That's a really great question. So as the term suggests, insider means that this is only to see people on the inside of the company. So that includes management, particularly directors, the C-suite, and what they may be doing. Because this is considered, public information whenever like the CEO of the company I'm analyzing right now is selling stocks, and I would want to know that being a shareholder of the company. So this function is for insider transactions.
Sure. Thank you.
Yeah.
And it's really like anyone who's going to, like, whose sale may kind of indicate a material change to the business once again. As Tav mentioned, those who have to file their share ownership, like their share ownership summaries will be included here. And it's really important as analysts to know this, because if we see a ton of insiders buying, people who directly have hand in what's happening with the business, that may be kind of a more bullish indicator on the company versus maybe a lot of people selling, especially like we saw a lot of selling volume kind of right over here. Then we're like, oh, well, it's had a significant run. Maybe the managers of the company think it's overvalued. It doesn't necessarily guarantee that. It's more just, this is some information that we can proceed to analyze with. And it's just another way to look at these sorts of things.
Definitely. And as with this function and a few of the others, you'll notice that there's the opportunity for you to adjust the time period that you're looking at. So please feel free to always play around with it. We're just going with the defaults for today, but bear in mind that this is always the option to adjust the time period you're looking at. I think this just gives us a past year, but of course you can go back for as far as Bloomberg has data. Great.
So there's a lot of more, like a ton of other functions within the company overview, but for now we're going to move on to the company analysis, because that's kind of the next step in this process, because theoretically we've gone over some things that's going to tell us about the company, and now we need to analyze it. So I think arguably the most important function in all of Bloomberg, or at least one of the most frequented, is financial analysis. This function, which is loading up right about now, is basically going to tell you all your financial information. First, it's not necessarily going to analyze it for you, but it's going to tell you all the financial information, income statement, balance sheet, ratios, enterprise valuation information, things like that, even ESG reports. And this is incredibly important because when looking at a company's fundamentals, this is really the beginning of it. You want to see, how is this company performing, not against anyone else, but just simply against itself. Is it generating strong positive cash flows? Are its ratios actually things that are attractive? If it's generating all negative cash flow and has negative returns on investments, equities, and assets, maybe we don't necessarily want to buy this stock. Maybe we want to short it. And so this is really the beginning of it. And there's a lot of different cool things you can do on this. So you can click around to their income statement, balance sheet, and statement of cash flows, which are things if you take in financial accounting, you're familiar with those. And this is just Bloomberg's way of showing this. And so you've got the income statement. revenue and different line items. And you also can see the different ways that it's reported, which is kind of interesting. And so this is another example, kind of testament of how Bloomberg really does have every little bit of information. You know, there's information going back several years and even some projections going forward. And so there's a lot of different things you can do in this one. One of my favorite ones is to look at their segments. This one, and it kind of varies company to company. Some companies have incredibly detailed segment breakdowns. This one's not so much. They kind of just have all their revenue from basically commerce, and it kind of wavers off around here. But some companies, if you break it down by segments, you can really see, you know, oh, these are their 4 operating segments, and you know, this is the segment's revenues, margins, net income. And recently in one of my VCF pitches, I spent a lot of time on this slide seeing, you know, how profitable was the segment. So financial analysis is great tool for that.
Definitely. And on that same vein, I want to highlight, you can also look at segmentation by geography, which tends to be extremely helpful for multinational companies, trying to figure out if they have expansion plans in particular regions, and which certainly may be more profitable than others. I wonder if you click on them right here, what we try to do as analysts is figure out, you know, what are the margins in each geography, for example, or different product lines, and this can help you key in on some of those details to figure out what are the main drivers of revenue for the company.
And especially because we just saw in that company news that they're investing $1.8 billion in Brazil, and then we come here and we see that Brazil's 50% of revenue. So with that information, I know that, well, Brazil's not really a problem for them. It's maybe more of an opportunity. They want to continue capitalizing on their growth. And so maybe, you know, without even reading the article or knowing what management's trying to do, you know, maybe I can start to draw some assumptions based on those 2 bits of information that I see. And again, this kind of contributes to how each of these functions flow into one another and then really contribute to your overall analysis.
Relative valuation.
Sure. So another function that's really important for analysis is valuing a company against its peers. You may have heard of comparable analysis or comps or relative valuation, something like that. And it's very important because, you know, the price of anything is what other people are going to buy for it. And I think the most common example that pretty much every professor is going to give you is real estate. You know, if you're looking to buy a house, it has 3 bedrooms on this neighborhood with this many bathrooms, this many square feet. Well, one of the easiest ways to figure out how much you should be paying for it is to figure out how much someone down the street paid for an almost identical house. Companies are kind of the same way. You know, you can look at e-commerce companies and come up with different ratios. You know, you don't want to just look at, oh, you know, Amazon's bigger than Mercado Libre, so we shouldn't buy Mercado Libre, because that's not really the best way to go about analyzing them, because you haven't really standardized the data. And so relative valuation, going back a bit, gives you some of their comparable companies. Companies operate within a similar space. For this one, it's more like internet e-commerce, but it could even be something like Target or Walmart, like you see here. Amazon, Alibaba, eBay, Jumia is another one that could potentially be seen as a competitor. And you can break down and look at, you know, oh, of this peer group, the median price to earnings is 37. Well, Mercado Libre doesn't have one, but all of these different companies have varying price to earnings ratios, and you can kind of, you know, do some further relative valuation based on that. And again, this is kind of the comp sheets thing, looking at their different multiples and comparing them to their competitors.
Absolutely. Great. So with that, I'm going to talk about, I guess, capital structure related functions. So WACC is certainly something that you'd be familiar with doing company analysis, which is the weighted average cost of capital. So when I type in WACC to that search bar, I get a response which shows me the cost of capital for various sources of funding, and equity and debt, you know, tend to be the preferred sources of funding for companies. So I can look at equity, debt, and this 2x2 table tends to be extremely helpful when doing any sort of discounted cash flow analysis where you will be using the WACC to discount future cash flows. So we can see that equity can, you know, forms 98% of the cost of capital and the way they've chosen to finance themselves. And you also get the cost of equity right here. And this is a really neat way to look at the capital structure of the company, as well as on the right here, you've got the market cap of the company, short-term debt, long-term debt, preferred equity, and the total. So this is really neat. If you click on cost of, if you click on equity right there, you get a breakdown of the cost of equity and how that value is exactly calculated. So that can be really helpful. And if you want to look at the cost of debt, which people often do, you can look at the effective tax rate that's applied to get this WACC calculation. You can look at the split between short-term and long-term debt, as well as just, the calculations that go into it here. Great, so that's the WACC for you. In a similar vein, we've got beta, which is BETA. And if you hit enter, you can see the historical beta of that company. Essentially what this chart is showing you is on the x-axis right here, we've got the S&P 500 index, and that tracks the largest 500 companies that are domiciled in the United States and tends to be a proxy for the US stock market. On the y-axis, we have Mercado Libre. And what this is doing, the data that's plotted right here on the top left, you can see it's the last price. And it's showing you where the S&P 500 closed on a daily basis and where Mercado Libre stock price closed on a daily basis. And it plots for you a regression analysis so you can see whether the two are correlated. And this is important for portfolio diversification. You often don't want to hold two stocks that move the same way or have the similar, beta, because you're just increasing your volatility, the volatility of your portfolio when you do that. And it can kind of be an overkill. If you do that, you might want to choose to diversify and pick two stocks that don't move in sync for your portfolio to maximize your alpha, reduce your beta. So what you can see here, I think what's most relevant is really the coefficient of the X variable right here, 1.3. That shows you that there is some correlation right here. If I look at the slider at the bottom, I can either slide it, the distance of this slider, like the length of it, shows you 1 year. So I can slide that physically and go back and observe how the Y changes as I move it across. So it goes up to 1.6 here, and it shows you that previously it was more correlated, and now it's less so. What I can also do is just drag the slider across to get more points of data going back. So this would be approximately 6 years going back if I did that. Great.
And these two functions, WACC and beta, are really important in this kind of story we're trying to build, where we go from the company overview, learning about what the company does, and then into some analysis. And because once you kind of break down the financials and look at, what's its balance sheet doing, what's its income statement doing, how do they look, in order to actually come up with a fundamental valuation, like Tav mentioned, a discounted cash flow analysis, you need things like your weighted average cost of capital and your beta in order to calculate that with the capital asset pricing model, which is, if you don't know what that is, you'll learn that in eventually your principles finance class, and if you choose to continue with it, other finance classes. And they're really important for coming up with that valuation. And you don't necessarily need to take you don't need to take Bloomberg's WACC. You should certainly calculate your own, put in your own inputs. Beta is pretty standard. This is like a great resource for getting data. But these are tools that you are kind of adding to your toolkit in order to value a company, in order to go out there and figure out, is this something I want to buy? And these are, kind of the top ways in the industry that experts do it. So really important.
Yeah, personally, this screen is pretty busy. Like I personally, you don't really need that whole graph, but what you would focus on is really just the coefficient of that X variable right there. And you'll notice that's the same as the raw beta on the right side. Great. So we're going to shift gears a little bit. We covered, let's see. So we covered company overview and showed you some functions there. We've just wrapped up company analysis. So we're going to go into research and estimates. So one great place to get to understand a company is what people who cover the company are looking at, what they're taking into consideration. So I'm going to start by introducing you to earnings and estimates for EE, if you're typing it on the search bar. This page is really great if you want to track the company's investor relations activity, basically. So what this is, it tells you when the company is reporting earnings next, which can be really helpful because, as Gabriel mentioned earlier, that's when we get to learn about material information about the company every 4 quarters or so. We know when they last reported earnings, which was just this week, which is great. We also have consensus overview about the company from people that cover the company, as well as analyst coverage, which we will go into A&R right after this. And Yep, so what you've got here is like EPS measurements, revenue, and what's nice is that you get the actual numbers as well as the estimates. And the estimates are developed from summarizing what analysts have got to say about the company and people who cover the company. So speaking of those analysts, there's a really neat function called ANR, which stands for Analyst Coverage, essentially. And what you see here is that on the top left, you've got, let's see, 26 plus 1, 27 analysts that cover the company, and 66% of them have a buy rating on the stock. You know, approximately 30 have a hold rating, and 4% have a sell rating. You also get to see, you know, how the stock has moved relative to the 12-month price target up here in white. So you get to see they kind of move in conjunction to each other. You will notice that the price target tends to be leading what the stock is at right now, but on its own, it shouldn't be taken as a measure of the company's value, because a lot of things go into that, creating that target price. But this gives you a sense for, you know, how many analysts think that the stock can go up, and at what price they're estimating the stock to go up at, like what level they think it can reach. So right now, we can see that Mercado Libre is trading at $1,400. And the 12-month, was it up there? Oh, there it is. Yeah, nice.
Sometimes that data is
Yeah.
or this.
And I think that's like 15 minutes delayed. But what we see on the screen here is that 12-month price target, the average of that is 1,948. So that's a pretty neat, you know, upside, and you get to see what the return potential is, which is like 40%. Yep, exactly. Great.
And this page is earnings and estimates as well as analyst coverage is really important to see because it basically tells you what, quote, the street is thinking about the stock. That's a term that's oftentimes thrown around because the street, referring to, you know, investment banks and different buy-side firms, are the ones that are kind of, you know, have a lot of weight in these stocks. You know, we showed you the institutional ownerships, and some of the stocks, you know, that you hear about every day are owned, you know, up to 80, you know, 90% by companies versus individuals. You know, it's not just everyone with a TD Ameritrade account. Sometimes it's, you know, banks with hundreds of millions of dollars invested in it. And so, you know, with that being said, that means that the volume is sometimes restricted to what a few people or a few, you know, different organizations are thinking. And so it's really important to see what, you know, what the street is thinking or what the street maybe doesn't know about the stock, because that's when you're going to really get your outsized returns. You know, when you guys as analysts do research and create a report and create a model, you've come up with a determination that's basically saying, I'm right and everyone else is wrong. And they're currently wrong because they don't know what I know. And so, you know, if you do a DCF model, you come up with a price target of like 1970. Well, this Andrew Rubin guy from Morgan Stanley is saying that everyone else in the world is wrong because it should be that price. And he's saying, in my report that I've written and in my model that I've done, these are the reasons as to why the stock is fundamentally underpriced. But he's also, you know, in order for that to come to realization, he's basically betting on all of us and the rest of the world to realize that and buy it up to that value. And so it's very important to see what other people are doing because, you know, it's public markets. You know, it's other people. You know, if I buy a stock, I'm not just buying it, you know, from nothing. I'm buying it from someone else who's choosing to sell it. And so that's you know, a really important because in the end, it's just a marketplace. And information is everything. And this is one of the best sources for that.
Absolutely. So paying attention to, you know, who those analysts are that are covering the stock, because they're actually very familiar with the space that they cover. What's really neat is that Bloomberg also ranks these analysts based on, you know, this 1-year return, for example. It's a measure of the total return that you would have received as an investor in the last year if you had followed this analyst's recommendations. So that's a really neat way for the analysts to measure how successful they were at, you know, their bets either way, buy or sell or, you know, hold on that particular company. One of my commonly used functions is Bloomberg Intelligence, which is proprietary to Bloomberg, created by Bloomberg analysts. And so the function key is BI for Bloomberg Intelligence. The reason I like this, I think I just pulled up everything. Okay, so BCO gives me Bloomberg Intelligence report for Mercado Libre, and BI gave me the entire database for Bloomberg Intelligence for me to search up anything I wanted to within that database. But what I really wanted to pull up was this. What this is a primer, as you can see right here. A primer is essentially a quick rundown of the company, but this is different from the description function because this gives you a sense of the most important pieces and components that are coming together for this company in the next year or so. So I'm just going to scroll through it really quickly. You can see here the two analysts that cover, or the two analysts that contributed to this report are both from Bloomberg. So BI Associate Analyst, that's Bloomberg Intelligence, and likewise, this is also Bloomberg Intelligence Analyst. I mentioned this was proprietary, so this is like inside sources from Bloomberg. What I really enjoy about this is that you get a lot of investment theses from these analysts or suggestions from what they are looking at currently, which can kind of spur your interest and spark your interest to discover more and understand why this is a potential relevant piece of information. What I like about this is that it's time-stamped, so you can tell when the analysts were last updated the Bloomberg Intelligence primer, because that's highly relevant because you always want to stay up to date. A great feature about Bloomberg, which I want to highlight as I'm scrolling through this, is that it's really easy to copy graphs that you can see on Bloomberg. Most of the time you can just right-click on them, which is failing me right now, but most of the time you can right-click on it and just hit copy. And it's super easy to just do that and paste it into a Word document, a PowerPoint, whatever you want. And it's extremely seamless. So that's a really neat trick. I think if you also hit data, you should be able to understand where that data came from. And it'll take you to the analyzer page, which does a little bit more calculations from the balance sheet and income statements that are, public information. This is an analyzer that will tell you where that data came from. And I believe chart is like the easy way to export it. I think this should be the easiest way to export it. All just right-clicking and hitting copy, and you can be on your way. So that's Bloomberg Intelligence right there.
So moving on to, again, kind of going back to the related functions menu, the next section, which is kind of comparable to what we do with relative valuation, is comparable analysis. And you'll notice that in there, RV is there again. And so some of these functions will come up a couple of times because they will tell you similar things. So, again, on a similar vein as relative valuation is comparable analysis. And this is really important because, again, you want to see what this company is doing in context of the world around. Certain funds, like the Towson College Fund, is benchmarked, and we kind of compete, or at least benchmark ourselves on a relative basis. Meaning, if we outperform the S&P 500, that is for us considered a win. A lot of buy side firms and different asset managers compete, or not really compete. They trade on an absolute return basis, meaning they're trying to just absolutely return the most percentage points possible. If the market does 20%, they don't care. They want to be as high as they possibly can as far as how their return goes. And so, you can see in here, you can enter different stocks, Amazon, and you can just kind of pull up a graph next to it. Yep, there you go. So, and this is, so you have two indices as well as two stocks, and you can see the price change, total return difference, and then the annual equivalent. And so this is a graph that's called like an indexed graph, meaning this isn't showing the stock's dollar price movement, it's showing its percentage movement, which is why they're all starting at 0. It's kind of like a fixed point, and from there, if one stock goes down 5%, one stock goes up 5%, that can be mirrored on the same graph. Whereas, a stock trading at $140, a stock trading at $1,400, their percentage change movements are, a 10% change of $140 is 14 versus 10% change of $1,400 stock is $140. So it gets a bit messy in there, but representing that 10% up and down is easily done with an index graph like this. And again, it's just really important to see those comparables in context. And so I think with that, we'll move on to kind of similar things with charting reporting, which is some of the most fun stuff to do. Like I'm sure you've all either been in here or seen on TV or something, just the various graphs and charts that are pulled up. And they look super confusing, super complex, and this is kind of Bloomberg's help for that.
All the more fun. Okay, so for charting, I'm going to start with GP, which is just a simple. Should I do that? Okay, great. So GP is just a simple line chart. There's not much to it, honestly. Since we've gone through a lot of Bloomberg functions, I think this should be pretty intuitive in terms of being able to navigate it. But yeah, this gives you the stock price of Mercado Libre for the past year, it looks like, and you can adjust the time frame right here. If you wanted to go back to 2005 and look at that, pretty self-explanatory. I'm going to highlight just one thing right here that you can adjust what goes onto the graph. So right here we have the last price, and you can plot anything you want it to. Essentially, you can plot the market cap, which may not be as helpful, but you can plot something like total cumulative return or total gross return, and that'll give you that on a graph essentially. I'm not going to do that because it's not extremely helpful, but this is really great for the closing price of the company. I believe this is to tell you the period of time that the data is taken into account. So I think if you did something like historical daily 3 month, this helps you adjust the periodicity and the range of the data that is being plotted. And all that does, visually speaking, is it makes these lines a little bit less like jagged. It just makes them smoother. If you were to plot like the weekly close, it doesn't necessarily like look as finicky. If you wanted something that's a little bit more smooth for a stock that's not as volatile, you don't need that daily data because it's not swinging like 20% every day. So this is really helpful to visualize that.
Yeah, and it's super important, the thing last that she said there, because when we're buying stock, we aren't necessarily buying it to sell it in the next day. Oftentimes we're trying to, sometimes that's certainly the case. We all know that happens, but when you're, maybe working in a bank or something, they're not trying to make a $700,000 or $700 million investment to hold for 2 days. They're trying to, capitalize on a longer term trend. So kind of smoothing the data down into a more succinct trend is definitely very important. And something also cool about this graph is that you can edit it and add different data points and stuff like that. Again, kind of like adding different. You can add different data points, whether you want moving averages or things like that. And you can also add comparisons, so you can compare the stock's movement against the Nasdaq. Okay, yeah. So now we have multiple graphs, and so there's just different things that you can do with this graph. And then one of my personal favorite graphs, and something that I learned from in the Babson College Fund from my executive in residence, was kind of like the adult team mentor. He's an industry expert, Tav and this is Tyson. He's also from Fund, and he's on Tav's team. They have their own mentor, and I have my own. And they're just industry experts who help teach kids like myself what's actually going on. And a trick he showed me when I was doing evaluation of the company, and I was concerned about it possibly being overvalued. And he was like, well, is it overvalued against itself? And I was really confused what he meant by that, because I just had no idea what he was talking about. And he was like, well, if you pull up its fundamentals and look at how it's historically traded, maybe we can kind of see, is it actually overvalued? And so you may know, like one of the very most common ratios is the PE ratio, price to earnings ratio. And I can, with this graph, look at how Mercado Libre is traded against its own price to earnings. So, if its price to earnings 5 years, currently doesn't have price to earnings, but let's just pretend it did. And maybe price to earnings was all the way down over here at the bottom. Well, then we would look at this 5-year graph and be like, wow, it's trading at a significant discount to its price to earnings. So maybe we can make a case for it being undervalued against its own self. And you can really do that with a lot. You can add, enterprise value. You can do all sorts of different things. Here's a good example. It peaked at EBITDA over here, and now it's down a bit lower. So maybe in my mind, this is a good time to buy it. So this is just a really important kind of more unique graph that you're not always going to find right off the bat, but just to do some more in-depth analysis is definitely a great tool.
Yeah, this is absolutely critical because something that Tyson and I learned from our EIR is that, you know, something might be a good company, but it may not be a good stock. And there's an important difference there because the company is what generates, you know, that cash flow for you. But if the stock is trading like 200% over what you think is reasonable, it shouldn't be at that valuation. And so this is extremely important, as Gabriel highlighted, because you want to understand what the market has done to that stock price. You might really believe in the company, but if you don't believe in the stock and its movement, it's all about the timing when that's concerned.
And one last graph we wanted, or one last chart we wanted to pull up, and also show you how you can kind of add in some data manipulation is called HP, which is historical prices. And you can see here, again, you see the range, the price, the last price, and the volume, reviewing it in a price table and some information. I can actually export it by clicking this button to Excel, and then I can, you know, run some analysis on that because part of our job isn't just looking at things, but it's also analyzing things.
Yeah.
So here we have an Excel sheet with the price and the volume. You know, we can go all the way down to a year ago, and you know we can do all sorts of different things to try to analyze the maybe analyze the day-to-day price movements. You can make a graph make your own graph in Bloomberg, but for say whatever reason you don't want to use Bloomberg's graph, you could export it here and make your own price graph if you wish. Yeah. And so there's a lot of different cool things you can do with the data when it's in Excel. And so whenever you see this export button, and also there's different settings that you can play around with, but this export button generally, when you're on a terminal, will allow you to export to Excel. When as far as data analysis is really important.
Yeah, that export button is probably one of the coolest things. Like I would double underline, highlight that one. So definitely really, really key. Do you want to go into? We're looking at RG.
Sure.
Great. All right, so RG pulls up relative graphs. And we looked at this a little bit earlier, but comparing the company to either a benchmark or its comparable companies helps you understand how that company is trading compared to its peers or the benchmark. This just gives you a really neat representation of it. I don't think I need to go into much more detail. Is there anything else you want to add?
Yeah, no, it's just kind of reinforcing the trend of, the reason that we include charting in our analysis isn't necessarily to, conduct extensive technical analysis and then buy a stock based on relative strength index. You can do that and it may work, but, in my background, in institutional backgrounds with fundamental analysis, the graph is really just a nice accessory to, the rest of your analysis. Again, my EIR will oftentimes be like, yeah, this graph looks attractive. And, if the graph looks unattractive, maybe that's an additional warning sign, or, maybe it's an additional benefit or an additional positive sign of the stock, we're pitching or we're looking into. And so, again, looking at stocks, looking at them in context of what's going on in the world around them, in the greater universe of stocks, is definitely something that's really important because, once again, you're buying something in a marketplace. You're buying something from someone else who's selling it to you. And in order to do that, you want to make sure it's kind of like when you're picking fruit. You don't pick the worst looking apple at the store. You want to get the best one out of its peers. And it's the same thing here with hundreds of millions of dollars. So it's very comparable.
Yeah, definitely. A picture can really sell your story. It really has that ability to convey a message that's not done through words. For example, this is a really great company. Like you can have a 10-page report about it, but sometimes it does come down to the stock price and that relative valuation. So extremely valuable there. Yep, I wanted to round up our session. We've got about 9 minutes for questions, and I also want to give Leslie a chance to hand it over. I'll give a little preview of the next session that we're going to have in 2 weeks. But before I do that, I just wanted to highlight again, for those of you that made your Bloomberg Market Concepts course, that will really help you get into these functions, which we did today. We focused on companies and equities today, but there's really a lot more that can be done with Bloomberg for commodities, currencies, anything global macro related. So I'd highly recommend going through that Bloomberg Market Concepts course It's an 8-hour self-paced course. I personally found it really fun, just to better understand the terminal, and hopefully this gives you a really good start into coming into this room more often and getting more information. I want to open up to any questions that we have in the room or online before passing it on to Leslie. Thank you all for coming and listening. This has been really great. I hope you took away something from it. Thanks, Peter. We have deafening applause here in the room. So that's fantastic. All right, no questions, I think. And then
So,
Tyson's got a question.
Yep.
So Gabe, you mentioned 5-year relative price, right, and checking that it's under it. But when it's over it, how do you account for momentum? What factors do you use to look at if
like
stock
which
is
like
getting,
technical factors?
not just technical factors, but like maybe there's this fundamental shift in the stock and it garners a higher multiple from here on out.
Mhm.
How would you use that in determining future based on its past?
Well, from like using the graphs, something that I look at is on balance volume, to see like what people have actually done as far as buying it. And Tyson brings up a good point as far as the price movements. Sometimes things are driven by momentum. Sometimes the momentum shift comes as a result of fundamental change, but that's not always the case. And so if I'm interpreting your question correctly, with these momentum shifts, comes an increase in the stock price, and that will alter the multiples that the stock price interacts with EV, EBITDA, as well as price earnings versus sales. And that will possibly artificially inflate the multiples, or sometimes it's a fair inflation. And so, when we do our analysis, if I come up with my comps or my DCF of the stock, I come up with a price earnings ratio of, we'll say 10x, and it's relative, or it's the chart's telling me it's currently trading at multiple of 24x. Well, that's roughly 140% overvalued, and that, according to just to that kind of rudimentary analysis. And so, maybe that tells me that this inflation is driven by momentum versus the company reporting stronger than expected earnings, and an expansion into Melly is currently re-expanding into Brazil, and so maybe that fundamental change is what's driving the multiple, and maybe it's not. So those are some of the tools and some of the more in-depth analysis you can use to do that.
And frankly, we get that so much with the comp services sector, which can sometimes tend to mirror like a tech stock. It's kind of in between. It's in that quasi space. But when you see a stock and it's trading at its all-time high, what really has materially changed about the company, that's really important to look at. And for example, that'll come out from like a company filing where they say, we're going to expand in this region, and there's no previous record of that company having expanded there. But that's where you come in as an analyst and do forecasting and understand, where does this take this company in the future? Does it keep going on a tear, or is there some room for consolidation there?
Yeah, sure.
Is there like a major difference in thinking of the MCP or like say an honor and recognizable?
No, the only difference would be that if you're like taught a function and you want to play around with it, you would need a terminal to do that. But as far as like your learning, it won't change. I know that I enjoyed having the BMC on my laptop and then being able to type in DES and look at the different things. But it's entirely flexible, and again, we're open basically 7 days a week, the entire day. And whether it's Tyson or Callum or Tav or me or some of the other Cutler Center assistants, we're always here to help with good questions.
I do want to say real quick, if you do decide to do it in here, the computers here don't support like wireless Bluetooth speakers or headphones or anything of that sort. So you would need to have a wired headphone set or something like that in order to watch it here without disturbing your peers. I mean, usually this room tends to be quiet with some conversation, so it's not terrible or anything, but just to keep in mind if you wanted to take that course, because that's an audio video platform.
And I see, Grant, you have your hand raised. I'm not sure if you
I have a question. About like comparing the Bloomberg terminal to a FactSet. Like, what would you say is like the biggest differentiator, like multiple differentiators that would make Bloomberg more of a useful tool versus a FactSet? That's what I'm wondering.
Yeah, that's a great question. Also, just for those who don't know, FactSet is another financial services database, very much like Bloomberg, although they have some differences. Tav can talk a little about that.
Yeah, right off the bat, when you said that, I think there are two things that I would probably use FactSet over Bloomberg for. The two are earnings estimates, probably. So as you saw on Bloomberg, we probably have like 2 years out of forecasted data, but on FactSet, you can conveniently get the next 5 years, which is really helpful for understanding how the street has estimated growth in particular segments, and it's really detailed on FactSet. So I quite enjoy using that. The second thing is that FactSet's user interface tends to be less, I don't know, some people prefer it, and especially for graphs that you may want to construct, the FactSet plugin on Excel tends to be really key because you get to make these beautiful graphs with a white background as opposed to like Bloomberg's black background. And it's sort of more user-friendly in that sense. If you wanted to use it for data visualization in particular, definitely I'd go for FactSet over Bloomberg.
Yeah, you can kind of see how Bloomberg looks like it was made in like 1960 and just never
Really
updated.
does.
And so just kind of from like a visual perspective, FactSet looks like it was made yesterday. And so it's a much more modern interface. Both are, you'll find the same information, and I often use both, in conjunction with each other. And they each have similar functions, just maybe the way you get to them may be a little different. But great question.
The quality on Bloomberg tends to be so good, but sometimes the way it's depicted tends to be like really bad. Like I remember there was a chart, I showed Tyson this, and it looked like a pack of like M&Ms with like some of them like melted or something, but it was a visual like circular diagram or something. Really hard to interpret, but so key to what we were analyzing, but I just couldn't use it because it was so visually unappealing that I just didn't make it to a report.
Like this one, this is like supply chain analysis, which is a more obscure function on Bloomberg, but like it's just kind of like looking at it right off the bat. Like, I mean, you can get some information, but it doesn't really, like if I were to show this to someone who, like if I were to show this to my little sister, she wouldn't really know what to see from that. And oftentimes, when we're presenting things to, even if it's to an industry expert, we want to have the visual so simplified that our words, kind of stand out. And like this is just another example of something that's a little bit more confusing and just not unnecessary on Bloomberg, but definitely my least favorite function.
Yeah. Yep, definitely.
Thank you. That was really helpful. Thank you. That was really helpful.
Yeah, I was just gonna say if there's ever any FactSet questions, we can also we're well versed in both.
Yeah.
If we don't have any other questions, one of our program managers in Cutler Center, Director Leslie, is in the visual box up there, has some stuff to say.
Great, thank you guys. So first of all, I just want to give a big thanks to Tav and Gabriel for leading this session. I hope everybody found it really helpful. For those that maybe haven't worked through the Bloomberg Market Concepts program yet, I highly recommend it as a great way of just kind of exploring Bloomberg, poking around and seeing some of these functions to get started. And hopefully a lot of what Tav and Gabriel walked through today, you found helpful for, perhaps some of your coursework or even just exploring the terminal on your own personal time. So we are recording the session and it will be available afterwards if you want to go back and review any of the functionality to just explore on your own. So feel free to do that. And then lastly, before we wrap up, I just want to quickly mention our next session, which is going to be scheduled for March 19th, that Friday. It's going to be led by Calliope Courtwright and Aditya Agarwal. So, and it's a great follow-up session to this. We're going to work through an activity, a DCF model, and allow some time to try to gather some of those inputs, but at the same time, walk you through some of the functions where you can find some of those inputs. So again, great practice for some of your coursework and putting some of what you saw today to work. So hope you guys can join us for that session, and more will be shared out to all of you within the next week or so. So hopefully you all can all join us then. But again, thank you guys for joining. Thank you to Tav and Gabriel, and I hope everybody has a nice weekend.
Awesome. Thank you, Leslie. And yeah, again, just everything we talked about today is super applicable for that session. So if you're interested, definitely come.
Thanks, everyone.